the Loop live on Bloomberg Television and streaming on your phone and Bloomberg.com. Good morning. I'm Betty Liu here to look at our Bloomberg top headlines. The Federal Reserve votes today on whether to impose new minimums on banks for capital. The new rules could call for banks to maintain loss-absorbing capital equal to at least 7% of risk-weighted assets, a ratio of 7%. The proposed change aimed at preventing another global financial meltdown and having taxpayers bail any bank out. Disney staring down a box office ambush before The Lone Ranger starring Johnny Depp opens in theaters tomorrow. Critics have broadly panned the action movie in harsh reviews, and with a $225 million budget, it's set to be the biggest flop since John Carter. And talk about a media company. Time Warner close to a deal to sell its Columbus Circle headquarters back to the related companies for more than $1.3 billion, according to people with knowledge of the matter. The move would pave the way for the media giant to move to a new skyscraper that is planned for Manhattan's far west side. The massive Hudson Yards project that Related is developing. And staying in property, that brings us to today's big Bloomberg big number, $865,000. That is what an apartment in Manhattan will cost you on average. It's also 4.3% higher than what you would have paid last year, according to Douglas Elliman Real Estate. Why the increase? Well, it was the busiest spring selling season since 2007 as buyers snapped up apartments faster than new units could be built. Talk about a housing boom here in New York. And in billionaire news, Oracle CEO Larry Ellison using his billions to speed up the sport of sailing. The 8th richest person in the world is using his smarts and riches to transform the America's Cup race with revolutionary boat designs that have more than doubled speeds over the past decade. And it's a good thing he's worth over $32 billion because these boats don't come cheap. It will cost almost $100 million for Ellison to fund the Team Oracle USA for the 3-year training period between America's Cup races. For more, be sure to check out the August edition of Bloomberg Markets Magazine or check out our exclusive Bloomberg Billionaires Index at Bloomberg.com/billionaires. And in the meantime, we've got some breaking news on Chrysler sales. June vehicle sales up 8.2%. That is pretty much in line with what economists had estimated, so 8.2% for the month of June. Remember that Chrysler had seen double-digit sales, so does this represent a little bit of a slowdown for Chrysler? We're going to keep our eye on these sales numbers. Remember also that Ford, GM, and other automakers will be releasing their sales numbers throughout the morning. Well, turning back to the markets, we've got an hour to go before the opening bell. I want to bring in Dominic Chu as a check on the markets. Dom?
Slowing momentum for U.S. stock futures, Betty. You can see here we're now kind of in the red, just a little bit. S&P futures down a point, session lows. S&P down again a point. At Dow Jones down 14 points. NASDAQ pretty much flat. On the Treasury side, 2.48% the last trade for yield on 10-year U.S. government notes. On the currency side, interesting note here, dollar-yen has breached 100 yen per dollar for the first time since June 5th. So we've seen a spike up in dollar-yen all the way up towards those session highs. So that's a trade you're going to want to watch. And on the commodity side, crude oil, $98.38. We'll call it up about 0.5%. And gold futures still below that $1,300 per ounce mark, Betty. $12.50 the last trade for those gold futures.
All right, Dom, thank you. Dominic Chu, our markets reporter. Coming up, forget the one-size-fits-all student loan. Imagine a loan tailor-made to the borrower. We're going to talk to former Wall Streeter who wants to shake up the way we borrow and pay for higher education. He says the system is completely broken. And celebrity chefs take their brand very seriously. Just ask our titans at the table. We're going to hear more from them in a moment and talk about the conversations that are happening in the C-suite of Paula Deen's former business partners who have left her since her own scandal. Plus, one of those titans, Mary Batali, knows a thing or two about Crocs. He loves his signature orange pair. We're going to talk to the company's CEO about how he's going to build a brand beyond the world of Crocs. Stay in the loop.
Around the clock, around the world, Bloomberg keeps you connected. On television, online, on the radio, and on mobile.
Some said the U.S. has lost its innovative power. We said, America is lighting the way as the innovation nation. Singular insights, superior execution. That's the power of global connections. Bank of America Merrill Lynch. Voted top global research firm 2011-2012.
TA25 from the Tel Aviv Stock Exchange, powering the Israeli economy. Find more information at www.ta25.co.il.
Wall Street, investors can trade stocks, options, futures, and Forex. But the most closely guarded secret, the bond market, is revealed on Interactive Brokers Trader Workstation. Interact with live bond quotes. Screen the universe of bonds by your criteria. Invest in them. Borrow against them at less than 2%. Trade them or make a market in them. Interactive Brokers. Stocks, options, futures, Forex, bonds, worldwide, from one account.
Here at Options Express, our clients really seem to appreciate our powerful, easy-to-use platform.
No, thank you. We know you're always looking for the best fill price, and Walk Limit automatically tries to find it for you. Just set your start and end price and let it do its thing.
Wow, more fan mail.
Hey, Ray. My uncle wanted to say thanks for Idea Hub.
Oh, well, tell him I said you're welcome.
He loves how he can click on it and get specific actionable trade ideas with their probabilities throughout the day.
Yeah, and these ideas are across the board. Bullish, bearish, and neutral.
I think you need a bigger desk, pal.
Another one.
Traders love our trading patterns. Now with options patterns.
What's not to love? They see what others are trading, like the day's top 10 options, trades by volume, and get ideas.
Yeah, I have an idea. I'm going to trade that in for a salad.
So come trade at the place that's all about options and futures. Options Express. Open an account today and get a $150 Amazon.com gift card when you call 1-888-280-4181 now. Options Express by Charles Schwab.
Well, student loan debt in the U.S. is ballooning to all-time highs. We know this, and students are seeking private bank loans for college and grad school. They face a harsh reality. The same relatively high interest rates, often well over 7 and 8%, apply to all student loans, no matter what they're studying or what year of school that the students are in. Well, one former investment banker is trying to change all of this. He's Derek Kaknes, left Wall Street, where he structured asset-backed securities to apply what he learned to the world of college loans, namely that interest rates should reflect the risk of a borrower defaulting on his or her debt instead of being a one-size-fits-all. And Derek joins us now with more on this. Derek, great to have you here with us. And, you know, we've been hearing so much about the student debt problem, out to more than $1 trillion, and how it could jeopardize the economy. The interest rate issue is interesting because it's influenced mostly by what's going on with government. So how do you propose to actually try to bring those rates down?
Well, thanks for having me, Betty. You know, what we sort of say at Prime Student Loan is that when you look at the student loan market broadly, everyone is sort of given a statutory rate set by the government.
Right.
And the issue is that these loans are prepayable in the same way that mortgages are prepayable. So if interest rates truly are too high and not commensurate with the risk of lending to these individuals, then the private market really should be coming around and just offering to refinance people into lower rates. And we see nowadays that's not necessarily happening, most likely because they don't have the private markets just don't have the information readily available to them about what are the default rates, what are the risks, you know, what are the differences between lending.
I don't understand. Why don't they have that information?
To some degree, it's a strategic opaqueness by the existing lenders. If you think, you know, right now there's not a whole lot of competition in the new student loan market. So you think of Sallie Mae and Wells Fargo, Discover, roughly 80% of the market right there. They're making new loans to new students, and they don't have a lot of incentive to provide information to someone coming in on the back end who's looking to refinance into a lower rate because they've already got the individuals on their books at elevated rates. What you're seeing now is a lot of players coming in exclusively focusing on that refinancing side, and particularly focusing not just on the private market, but in particular targeting some of the higher interest rate federal loans that you see in the news nowadays.
Okay, so Derek, tell me exactly what your company does then. How are you trying to then vary the interest rates depending on whether or not each student is going to pay back that loan?
Well, what we do at Prime Student Loans, we've sort of a technology platform that aggregates automatically what we view as relevant financial data. So things like employment, education history, even to the extent that we can get cash flow data on a monthly basis from individuals. And we make that available to underwriters. So we're not actually originating loans ourselves necessarily, but providing the data to people, what we would call smart money, that's looking into this market and trying to really bring
these are private
more rational
You're talking about
efficiency
private.
to it.
These are private companies.
Private capital.
Okay, private capital that's thinking about refinancing these student loans. You're providing them the information that allows them to determine what the interest rate should be.
Exactly.
Okay, so what are you finding exactly, or how are you, sort of what data are you finding?
Sure. I mean, what you see right now is that the market is grossly inefficient. So what we typically tell people right off the bat is, if you look at 3 criteria, for instance, has a person graduated, are they employed, and have they made at least 3 full payments on their existing loans? If they meet those 3 criteria, they're 50% less likely to default than the general risk pool. So you see right off the bat that there should be an enormous amount of people qualifying and readily refinancing their loans within, say, 12 months of graduation, and right now that number is less than 5%. So right off the bat, there's sort of a lot of low-hanging fruit here, and it's really a question of just getting people interested in the market. You know, like in 2008, a lot of people got burned on what was, frankly, fraudulent activity in the market, and it's been a little bit of a slow time getting people reoriented, coming back around to this asset class.
Who got burned?
Investors broadly in the asset-backed securities market.
Okay, so what do you think is going to get more private capital then into refinancing some of these student loans? Is it just simply information, or what is it going to be exactly?
It's a combination. I mean, it's largely pounding the table, getting out there. Folks like us, folks sort of our pseudo-competitors, you look at like a social finance on the West Coast or a common bond in New York. You know, those guys are going out and really bringing capital into the, reaching out into the capital markets and finding individuals who are reaching for yield in places where it doesn't exist at this point, and showing them that this is a very, very attractive asset class where you can get above market returns without taking on additional risk.
Now, the one risk, though, Derek, is I know in the government right now they're considering bills where they're going to actually lower student interest rates from the high, 6, 7, 8% that you see right now.
So we're not actually talking broadly about an interest rate play for the most part. There is certainly an element to that today, just given where the statutory rates were set and how low rates are today. But even the discussions in Washington today are largely about moving from a fixed rate environment to some type of floating rate, whether that's set at origination or floating throughout the life. And what we're really talking about is a contraction in the credit spread. The risk of lending to these individuals changes over time. The risk of lending to a freshman in college is dramatically different than someone who's graduated, has a job, and is paying their loans. So what we're really talking about is, whether you move it from what is today a 7.9% interest rate to a Treasury plus 4.5%, that doesn't change the fact that the credit spread itself is intrinsically tightening.
All right, Derek, very interesting. Thank you for joining me. Derek Kaknes of Prime Student Loan, trying to change what's going on in the student loan market. Coming up, it took Paula Deen years to